News coming from the Bank of Canada. As expected, the Bank of Canada has raised its key benchmark interest rate by 25 basis points to 5%. BNN Bloomberg's Paul Bignell is joining us now with more. Paul, we spoke about an hour ago. This, again, meeting expectations. Give us your thoughts on where we are now, 5%, another rate increase. Is this it?
Well, that's the question that Canadians are asking themselves. This is rate hike number 10 since early March of 2022 as the Bank of Canada tries to bring inflation down from a peak early in 2022 of 8% to, at the most recent reading, 3.4%. It wants to see it all the way down at 2.0%. Now, one significant piece of news in today's release, Marcia, is that the bank now forecasts that it will be mid-2025 before the target inflation rate is achieved. That's 6 months later than the last time it made a prediction on this. The last time it made a prediction on when the inflation target would be achieved, it said that it believed that late 2024 was its best forecast. Now it says mid-2025. So that's a clear statement from the bank that inflation, not for the first time, is proving much more difficult to tame than it would like. And it could be, I think what that is that hawkish language that we were talking about an hour ago, where the bank certainly is not telling Canadians we're going to raise rates again, but there's the implication is clearly there that the bank will do it if necessary. As always, the bank concludes its statement by saying the bank remains resolute in its commitment to restoring price stability for Canadians. Now, that is the typical ending these days for a Bank of Canada announcement, but I think there's some meaning there as well, that the bank is certainly telling Canadians it may not be finished yet if inflation proves even more difficult to tame.
So, Paul, does that mean any talk of rate cuts are now off the table?
They certainly, when this year began, Marcia, many people were hoping for and perhaps even predicting rate hikes by the end of this year. That is certainly off the table. The bank seems to be taking it off the table for the end of 2024 as well. If it says that inflation will still be running above target during the first 6 months of 2025 before it hits 2%, that does not sound like the type of environment in which the Bank of Canada would raise rates again. And as we mentioned in our conversation an hour ago, economists believe, and the bank believes, that interest rates take between 12 to 18 months. Some economists say they can take 24 months before they take effect. So there's a lagging effect here. The bank has raised rates now 10 times since March, or very early March of 2022. But only some of those rate hikes are a full year old now. You get the picture that there's a whole series of other rate hikes that have not yet reached 1 year, have not yet reached the 1 year anniversary point, and they have not had a chance to exert their impact on the economy. So the bank is saying that it felt the conditions were necessary to raise rates again, and it remains focused on inflation as its target.
Okay, final thought, because I've been looking at the markets and the Canadian dollar, which popped a bit following the decision, about 76 cents right now. TSX is up by about 98. Does this decision from the Bank of Canada factor into what we're seeing with the Canadian dollar or the markets?
I think it's that forecast that inflation will remain above the target until mid-2025. If anything, that suggests a willingness from the Bank of Canada to raise again. And higher interest rates tend to be positive for a domestic currency because they make the country, in this case Canada, more attractive for international investors to park their money, to buy bonds here. And to do so, they've got to buy Canadian dollars, and that creates demand on the currency. One of the big factors in the Canadian dollar is which central bank, the Fed or the Bank of Canada, is going to raise rates the most. We still expect 2 more rate hikes from the U.S. Fed. The conventional thinking is the Bank of Canada may be finished now. But again, that statement about inflation remaining above target until mid-2025 may be what currency markets are focused on today.
Paul, thank you so much for all of that.